Welcome back to the channel. All right, today we are going to be looking at two very important things. We're going to be looking at the bearish case and the bullish case, and we're going to do that for Bitcoin, Ethereum, EGLD, and Cardano. The point of this video is to give you information that you can use to figure out what it is you want to do in the market right now and where you think things are going. You know, it's to try to give you as unbiased information as possible. VoiceOver Pro, thank you, or VoiceOver Row, thank you for following me on Twitch. I appreciate you. The next thing we're going to do after that is we're going to look at a couple of, or we're actually going to do this in between. We're going to look at a couple of Glassnode charts that have been shared on Twitter, and I'll take you through some of those so you can use those as information too. That's going to be that's outline. You know, that's what we're doing. So make sure you like, make sure you subscribe, make sure you get ready. And we're gonna kick this off with Bitcoin. All right. So the first thing to note with Bitcoin is that it has definitely gone through a cycle right now where it has turned very bearish, and it is still looking quite bearish on the chart. Now, part of the reason, and actually the main reason for this, is because of Elon Musk. Elon Musk tweeted that. We talked about this in my last video. He tweeted that Tesla is no longer accepting Bitcoin for payments. This, in reality, has its own reasoning for it, right? He sees that the coal usage in China to mine Bitcoin is going up, and that's unacceptable. It's likely a lot more unacceptable for his investors, for different corporations, or not corporations, but different groups he's a part of with Tesla that deal on climate change and renewable energy. And they do not, a lot of them do not like Bitcoin because, I mean, you got to understand, why do people not like Bitcoin? Because if they truly understand it, it's a net positive for the environment, right? It can improve with renewable energy. It incentivizes using renewable energy. And on top of that, it disrupts the store of value market of gold, which is very destructive to the environment. So the more market cap we capture from gold, the less valuable gold is, the less production of gold. So this is a known fact. That's how it happens. But why do people not like it? Well, because a lot of multi-million and billion-dollar investors are very much related to the US dollar. They don't want to see something else taking all the market share. They want their US dollar to do well along with gold. They want that to do well because they own a lot of it. So there's always a biasy, and also we did see that a large amount of Bitcoin went onto exchanges and was sold before Elon Musk's tweet and a little bit after. So what that means is that people knew this tweet was coming out, unless they just happened to put so much more Bitcoin on exchanges at the same time. So keep that in mind, that this isn't just, you know, he decided to go online and tweet something. This seems to have been somewhat coordinated to take profits in the market, likely from people who knew it was coming. Those people are more than likely his board of directors or investors that were informed about this before it happened. Right? Before Tesla makes a decision like, we're not going to accept Bitcoin anymore, they are going to notify a bunch of people that are going to be very happy with that. And then those people, if they own Bitcoin, are likely going to sell it to take profits before this occurs. You know, you do that kind of stuff in the securities market, and it's called, it's called, what is it called? It's called insider trading. So technically, that's what happened here, and it's kind of sad that that's what happened, but that's the case. So keep that in mind, do with it what you will. Let's get to the chart. Okay, so the first thing to see with the chart is we have had a very long period that we've been looking at this support zone and this resistance zone, all right? In the middle, we have the golden pocket. Now, what we have seen happen with this drop is that we have essentially gone from that high resistance zone and drop below the golden pocket. You normally do not want to drop below the golden pocket. So what we're going to have to do is we're going to have to redo our Fibonacci retracement to see what was the local low we were looking at to picture this golden pocket, and then see where our lower golden pockets are to see if we have bounced off of those, if we were getting support there, what exactly are we seeing? Okay, now as far as what's happening now, it is slightly concerning. And the reason that it's concerning with Bitcoin, so this is the bearish case, right? The reason it's concerning with Bitcoin is because if we look at the volume over the last 4 months, I want you to focus now on the right-hand side. Okay, the right-hand side is the VPVR, the volume profile. Now, one thing to note with this volume profile is we are reaching the bottom of this area. So this area here, we have a lot of volume, right? But the area that we got support on was right at the bottom of this, and it's expected, right? You would expect support here. That's why I have the support zone there. Now, what worries me here is that we didn't break past the golden pocket and we're still trending down. Now, if we're trending down and we take another dip, it's a very good possibility that we go all the way back to around 40K. Now, that possibility, if it happens, will more than likely, if we were to drop anywhere between 40 and 45,000, if we're to go anywhere that far, it's very likely that those prices will get bought up pretty quick back into this support zone. Now, the reason for that is, nobody is going to wait for Bitcoin at this point to drop much further below 40K. There's way too much support below 40,000. So what will likely happen if we drop further is we will see some support start building up in this area, kind of like we saw happen here. This area of support was a lot less until we started trading here again. So that's a possibility on the bearish case. You got to keep that in mind. That could happen. And that could also scare people and take the price down a little further, but more than likely, if it drops into the 30s, it's going to get bought up really, really fast. That is when you will see a wick and more purchasing coming right back up. So you could see something like this and then a recovery following. Honestly, if a drop like this was to happen, I want to see it trade between 40 and 45,000 for a while and build up some more support here. The more support you can put below this entire area, the better it's going to be for Bitcoin in the next 3 to 4 months. Because the thing is, long term, Bitcoin is still bullish. This tweet by Elon Musk didn't change Bitcoin. It scared people. And we're going to get into who got scared. All right, so we're going to get there. Now, another thing for the bearish case for Bitcoin, we're going to take a look at the weekly chart. You're going to see a lot of people talking about the weekly chart right now. And I'm going to tell you why. So the 21-week moving average is an important moving average on the weekly chart. Mine is a little bit lower than theirs. Mine is the 20 exponential. They look at the 21-week. So my moving average is actually a little bit higher than where the 21 is, but they're generally in the same place. I'm going to zoom in a bit more so you can see it. Okay, so this blue moving average is the one we're talking about. Now, in a bull market, in most bull markets, you always stay above this 20 exponential moving average. Now, what have we seen? We have seen something interesting. We're going to go back. All right, so this here was March 2020. When Bitcoin crashed, it went far below that 20 exponential weekly moving average, and it actually went into the 200 exponential, the 200 weekly moving average. Let's just call it that. So it went all the way down there, and then it started recovering. We saw that the death cross reversed into a bullish cross. So we saw a golden cross here on the weekly, and then the price never went below that moving average again. So after it went past that moving average in April of 2020, we have not gone below this 20 weekly moving average since then. This exponential moving average is very, very important. And you'll see what I've done is, in the past, I marked the single area during the bull run where we went and touched that moving average. It was right around here. It was actually right around here. Okay, so this area is where we had touched it. Now, the thing to remember is that from this touch, we started the next bounce, a massive bounce all the way up from around 10,000, taking us to about 38,000 until we saw a weekly drop, right? A significant weekly drop. Now what we do is we zoom into where we are now. When we're looking at where we are now, we are once again trading very close to this moving average. We actually went further below it. And the reason is that this moving average now is in our purple support zone. So what you don't want to see, what is going to be a bearish signal to a lot of people, is if this weekly candle closes below the moving average. So you don't want to see the weekly candle close below 47,000 essentially, right? Anywhere below that number, if this candle closes there, people are going to see that as a bearish sign, and they are going to expect more downside, likely to around 40K, until we get support and trade in that area. So keep that in mind. This is a very critical thing to look at because a lot of people are looking at this. The way this plays out over the next about 30 hours is going to determine the next move that occurs. Now, you could also see something like this happen where we close below this, we start taking a drop, and then we get bought up immediately and start moving right back up. You could see the next candle the next weekly candle could look something like this. It could see a drop down and then just shoot right back up to the 50s. It's very possible because you have a lot of people looking at this and a lot of people are going to sell. But with Bitcoin, the interesting thing is people are waiting to buy. So once you see those sales, you seem to see that it gets picked up very quickly. That is why this entire region that we've been trading in, you have seen the price go up, then you've seen it go down and get bought up right away, go back up, go down, go back up, go down, go back up. Now we've gone down again. And we actually have not gone down below the weekly moving average in February. So, and not moving average, but that weekly candle in February, we haven't gone below it yet. We are still far above it. That went down to around 43. So we really want to see which way this is going to turn. On the weekly chart, the only bearish thing is that we are trading right at this moving average. If we can hold this moving average, maybe even trade on it for a little bit and then go up, that's very bullish. So keep it in mind. Ronald Legend, thank you for following here on Twitch, man. Appreciate it. All right, so that is essentially the bearish case. There's not a ton else to say bearish about Bitcoin, and the reason is Roland Legend, thank you. You just subscribed and you got that Elrond NFT showing up. Thank you, man. I appreciate it. Okay, so we want to make sure that when we look at the bearish case and bullish case, we're making sense of it. Daweed, thank you, man, for following too. So when you look at that bearish case and bullish case, keep in mind that the asset hasn't changed, right? All that's changed is that Elon Musk tweeted something to 50 million followers and scared the crap out of a lot of people, and a lot of those people sold. Cascading effects like that happen, but when they happen, you got to ask yourself, no matter what asset you're in, are you bullish on the asset, right? If you're bullish on the asset, then the fundamentals of that asset haven't changed. In fact, since the time of this tweet, hash rate has continued to increase. The Bitcoin network is more secure, and we are seeing a lot more accumulation by people that have held Bitcoin for over a year. The majority of the people that are selling are short-term Bitcoin holders. And guess what? They're the ones who get scared. So it's very, very good, honestly, as far as long-term fundamentals go, to see those people get scared and sell and see that stronger holders are buying. That is a great sign because that tells you that the people who understand and know Bitcoin, they're not going anywhere. They're buying more. So keep those things in mind. You're also going to see that there's a lot of people, including Twitter CEO Jack Dorsey, that are supporting Bitcoin in these times. You know, so keep in mind that one person tweeting, yeah, it might be able to slow Bitcoin down, but it sure isn't going to stop it. And honestly, I don't think Elon Musk has any intention to stop Bitcoin. I truly think that he doesn't even 100% believe in what he tweeted in. I think he did that to benefit the groups that he's a part of and the larger investors that want his company to portray their message. So it's unfortunate that Musk does this kind of stuff, but he has so much reach on Twitter that it actually does move markets. So when it does, certain people are going to want him to move the market their way. And I think that's what happened here. I'm sure he does believe in not using coal for Bitcoin mining and reducing CO2 emissions. I'm positive he believes in that. But the fact of the matter is, if he really believes in that so much, then he should sell all his Bitcoin. There's no reason for him to hold it. And I mean, actually, you know, it's a net positive, but what I mean is if he really believes in Bitcoin being this bad, then he should get rid of his Bitcoin. Like, why should he be profiting off it? He just made over $100 million off of Bitcoin. Like, get rid of it. Sell your Bitcoin. You don't need to hold it. You know, it's not like you're helping the market by talking this kind of stuff on Twitter. And then on top of that, he essentially, like, he still accepts cash for his cars, right? You can still pay him in money. The global banking system is far worse for the environment than Bitcoin. If Bitcoin is only a fraction of that, a tiny fraction. But, you know, it's kind of hypocritical to hold Bitcoin, make profit off of it, to keep accepting fiat currency and regular money for your cars when the banking system is so much worse for the environment. So there's really a lot of ways you can see this as a hypocritical move, and more than likely a move that's just going to benefit him in some way. And that's, in my opinion, that's what it is. That's what it is. Because he's smart enough to understand that Bitcoin incentivizes renewable energy. And for the future, it is very, very good. It's a very good thing for the environment. Okay, we're going to go back and look at a little bit of a larger picture now. We're going to switch over to the daily chart. Now, when we look at the daily chart, what I want you to take a look at, I'm going to get rid of the EMAs, Okay, well, let's get rid of the exponential moving average. All right, so when we look at the daily chart, I want you to take a look at where we are. We had this red line here as a major support line. This channel was one that we wanted to hold. Now, as far as the bearish case goes, we are dipping below this. When we dip below something like this, we don't have a solid area of support to look at anymore. Sometimes when you break out of something like this, you can just go off a cliff. So that's once again the bearish case, right? We don't have too many areas to use as a metric line of support on this long-term trend. That's when we look at these indicators, right? We can create one. If we get rid of all these indicators the way we've been looking at them and then zoom out, right? We can use the current price level to create a new trend line. So if we do that, what we're essentially looking at is to create a trend line that follows the most top or the most bottom portions of this market. So we're basically going to do something like this, right? We can do it this way or we can do it this way. I'm going to do it this way because we're hitting 3 contacts this way. So if we look at this trend line and then we zoom back out, okay, we'll increase the time frame. Then we start to see that we basically have a much longer term trend line here, but we are dropping below this as well. So essentially now we're either going to do one of two things. We're either going to take a dip and drop below this and then recover and then come back above this, or what we may end up doing is just going sideways against this for a while. And if we do that, then we'll probably get back above it at some point in the future. It just depends how long this bearish cycle will last. Everything happens in cycles. And in reality, this cycle, as far as bearishness, is not that bearish, because when we first had this top here, we had a very similar dip based off of the same type of FUD and people thinking Bitcoin hit a top. And now with FUD coming from Elon, who's so influential, we're having the same dip that we saw in February. So we're really not that bearish yet. The price has to go somewhere 240 or below 40 for me to say that this really turned things bearish. What this did is it scared people and they sold. So a fear sell-off is normally a great time to buy. And if this does go more bearish, it's going to be a better time to buy when it drops down to 40K. So my buy orders right now are sitting at 38,500 and 41,500. So if I end up getting lucky enough for those buy orders to trigger, great. But that's where I'm purchasing right now. I'll see how it goes. If it continues moving sideways and looks like it's never going to drop down to those levels, then I might buy spot or something like that, because I always continue to accumulate my Bitcoin. Okay, so that's pretty much what we're looking for Bitcoin for the bearish case and the bullish case, all right? There are pretty much a variety of reasons why things could go bearish, and within those, I've given you a bunch of bullish cases as well, which is that, you know, primarily that this is just a fear sell-off. We just have to see how long that fear sell-off lasts. As far as the bullish case goes, in reality, what I'm expecting to see is once we flip back over this red line, we are likely not only just going to break the all-time high, we're going to start moving to a much further cycle and going up to 80,000. And towards the end of the year, we should be well over 100K in my opinion. Because right now, Bitcoin is undervalued. So if it's undervalued right now, then we can only assume that as the fear goes away and we start to get more bullishness back in, the price is going to readjust to account for valuation. So let's see how that goes. But right now I'm seeing a lot of reasons to be careful, but I'm also seeing a lot of reasons to be prepared for the next leg up. So we need to keep all those in mind. And remember, very, very key, the weekly chart, we do not want to close below the most important moving average on the weekly, which is this one here. It's our blue line. This is our 20 exponential moving average. All right. So keep that in mind. If we close below this, things could get dicey and you might get lucky and be able to get some cheaper Bitcoin. So keep it in mind. We're going to keep looking at it. We'll get back to this a little bit later. I have a few other things to show you on Bitcoin, then we're going to move on. All right. So next thing I want to show you here are, okay, so this is a post made by Pomp, Anthony Pompliano. This is on his website, pomp.substack.com. I'll put the link in the description so you can check it out. But basically, he has consolidated a bunch of different charts from Twitter and put them together. First thing that we're going to do is we're going to zoom in on this. Hang on, let me go full screen right here. Okay, here we are. We will make this a little bit bigger. All right, so I want you to take a look at some of these charts, and I apologize for the visibility of some of them because this is on a website, so I can't zoom in on it too much more. So we see here the total transfer volume to exchanges. All right, this is taken from Glassnode, and we're looking basically from May 12th to May 13th and a little bit after May 13th. All right, so it's missing the last day, but you saw here that overall we were in net, we were moving down. We saw a spike the day that that tweet came out, and now we started moving down. I think there have been a couple of more spikes, so keep that in mind. Here we are seeing the futures long liquidations on May 13th. We had a lot of longs that were liquidated. So that's an interesting thing because you always want to see leverage traders going off the market. Leverage traders just add to volatility for Bitcoin. So having so many people liquidated over the last couple of months is going to really help the volatility of Bitcoin. And it's probably the reason why it's not crashed even further. And we have this one here. This is called the net transfer volume to and from exchanges. And you'll see that overall, this has been dropping. This has been dropping for quite some time. So this is an interesting metric because what we really want to see is that this continues to go lower and you're having less activity on exchanges. Here we have the total transfer volume from exchanges. This is going up in the last few days. Now we're seeing a lot of money a lot of Bitcoin is leaving exchanges, and that's continually happening. So that's something very important to look at. Okay, this is Tether, and you see something, the reason that Tether is shown here is because the amount of money that goes into Tether has a correlation with the price increases of Bitcoin. Normally when you see a lot of money going into stable coins, that's a precursor to a big rise in Bitcoin. So keep that in mind as well. Short-term holder SOPR. So this is a very interesting thing. This is a 6-hour moving average, and this actually goes to the month of May. You'll see the majority of activity between the month of May has been coming from spikes of short-term holders. All right. Here we have the futures perpetual trading rate. So you'll see that futures have been trading very high for a good amount of time during this entire drop. That's always a good thing to see. Open interest has dropped a little bit. I want to see if there's anything. Okay, so NVT, we're going to get to that. And another one. This is also interesting. Supplies held by entities with balance 100 to 1,000. So this is a 7-day moving average showing you how many people own Bitcoin with over 100 to up to 1,000 Bitcoin. And during this entire drop, they have been buying like crazy. So high holders have been really taking advantage of this drop, and they've been accumulating Bitcoin. So keep in mind, whenever we see something like this, where we see the price drops, the accumulation rises, that's normally followed by a big rise in price. This has happened numerous times, and it's always had the same results. So normally when you see these lines deviate, you're going to expect to see that the price is going to move up above this line at some point. The price has been above this line for a very long time, and now we are finally once again at a point where the number of holders, the moving average of the number of holders over 100 Bitcoin has the correlation between the price has crossed again, and eventually the price is going to spike up to get back above this. So we got to keep that in mind too. Minor net position change. So this is interesting. So this is the entire month of May. Actually, from April until now, miners are continually upgrading. They're continually increasing their holdings. This is very bullish. So the charts I'm showing you now are very bullish for Bitcoin. The unspent supply for miners is still going up. They are continually accumulating. All right, total supply held by long-term holders throughout this entire month has been rising. Long-term holders have been accumulating, and that is a great sign. It shows you a lot of strength. The long-term holder net position change, you can see it once again here. A lot of long-term holders sold during the initial rises in January and February. That's fine, but now we've shifted into a much stronger long-term holder accumulation phase during this month because people are seeing Bitcoin as undervalued. Okay, these are pretty much the main charts I wanted to show you here. Each of these are very bullish. I'm going to switch on to one here. Okay, so the NVT, what you should know about the NVT, we'll read about it here. The network value to transaction is an indicator that describes the relationship between transfer volume and market cap. It is often called the price to earnings PE ratio of cryptocurrencies. It was created by Willy Woo. It is calculated by dividing network value by daily transaction volume. All right, so let's take a look at that. This is the adjusted NVT for Bitcoin. The last time it crossed below this level here was in March 2020. And after that, as it recovered, it has been above that line the entire time. The key takeaway is that when it was below, it was severely undervalued. Now what we've come and done during this consolidation is we have come back and touched this mark on the NVT, telling us that at these prices today, Bitcoin is moving into a undervalued stage that we haven't seen since the crash of March 2020. That is a very, very bullish signal for Bitcoin in the long term. So keeping eyes on these charts, very, very important. This was posted by Lex Moskovsky on Twitter. He is at MSKVSK, and it was retweeted by William Clement. That's a guy that I follow. You can check my followers on Twitter to follow these people. All right, let's actually follow Lex. So we'll follow him, and well, let's see. I think that is about it for Bitcoin. All right, so we're going to move on to Ethereum. You've seen the bullish case and bearish case for Bitcoin. Ethereum is going to be much shorter. Ethereum, I mean, you got to look at a few things. One of them, if we look at that weekly moving average, right? The worry for Ethereum right now is that at some point it's going to come back down and touch this 20 weekly moving average. That happens with every asset during bull markets. It's rare that you don't see one reverse and come back and touch this moving average. The worry right now is that this moving average is sitting at 2,000. So the bearish case for Ethereum is that it's at a certain point you're going to see a massive consolidation and it'll come back and touch this moving average. The bullish case, though, is that that doesn't have to happen immediately. Ethereum is still very bullish. You can see it continue moving up for another week, and then this moving average might be as high as, you know, by June, this moving average could be as high as 2,700. Now, another thing to remember too is if we do start to see this going bearish in the next 2 weeks, that is a very good thing. You kind of want to see Ethereum go bearish in the next 2 to 3 weeks. It would be great for Ethereum. If you look at the TD sequential as an indicator, we are at a green 8 on the weekly. All right, that means that we very well could see a green 9. Now, it's not always going to be bearish. We saw a green 9 here, and the price kept going up until it reset. The same thing could happen. But basically, for us to see a green 9 here, it's much easier to assume that at some point people will take profits on their Ethereum and will consolidate, rather than we're going to just keep moving up nonstop until we flip the market cap of Bitcoin or hit $8,000, $9,000. That's a lot more of a risk to happen. Probability is on your side when you say that an asset's going to consolidate during a bull run. So that's the main worry for Ethereum. Otherwise, Ethereum is looking insanely bullish. Now, as far as the more sensible bearish case for Ethereum, is that we will eventually consolidate down to around 2,700. And the reason that we do that is we look at a short-term low and then we look at a high. So it might actually be a little bit higher than this now. Let's unlock this fib and increase it to the top of the current channel. So that puts the golden pocket for Ethereum sitting at around 2,800. Now, if that's the case at around 2,800, that's a pretty big consolidation, but it would be a very healthy one. So if it comes down and touches the 2,800 level, that's short-term bearish, long-term bullish. So keep that in mind. With Ethereum, there is a chance that consolidation could happen at any time. I think it's possible for Ethereum to go all the way to 8,000 within the next few months, and then come back and test these levels. So keep it in mind. And if it goes up to 8,000, the golden pocket will not be at 2,800, right? The golden pocket will be much higher. We would have to adjust the Fibonacci at the right time. But with Ethereum, I can't give you much more of a bearish case. Even if we look at the 4-hour chart, what we're seeing here is that Ethereum is getting massive support at all the right areas. The only thing that you don't want to see with Ethereum on like a chart like the 4-hour is you don't want to see the price drop below 3,500. If it drops below 3,500, then there's a good chance it could go all the way down to 31. And that's actually, you know, the funny thing is it's not essentially bearish in the long run. It's a short-term bearish turn, and that has to happen for people to take profits, for the RSI to reset, for weaker hands to get out of the market, for stronger hands to keep it moving forward. So, Ethereum's actually looking a lot more bullish than a lot of other assets right now. But the bearish case is that it could have some short-term downside. It's just unknown if that's going to happen. So you can plan your trades accordingly, and you might get lucky and be able to pick it up cheaper, but you might not. I mean, this thing could trade sideways for a week and then just shoot past 4,000 again, right? It could go all the way up to 5K. You have no idea because people are so bullish on Ethereum right now. All right, so that's pretty much it for Ethereum. Not a lot to discuss there. The RSI on the 4 hours looking good. The RSI on the daily is also looking good for another move up past 4,500. And if we look at the weekly, that's where you start to see that the RSI is getting oversold. But as it starts dipping, if it goes back to the 70 level, that's going to be a good signal that it's ready for another run. So keep that in mind. Now, obviously, once you go to the monthly, everything's overextended. So we don't even look at the monthly now. Okay, that's pretty much it for Ethereum. Let's move on to EGLD. All right, so with EGLD, we're at a very important point. The bearish case for EGLD is essentially that we don't hold this moving average on the daily. On the daily, this is the 100 exponential moving average. It's the aqua line here. I'm going to get out of full screen mode so you can see it better. Okay, so that's the aqua line here. If we don't hold this moving average and bounce above and go back above our golden pocket that we were looking at, that's a pretty bearish sign. Now, what we can do actually, sometimes you have to look at a more long-term picture, right? We can unlock this fib and we can take it back to a prior low. And if we do that, what you'll notice is that on this longer-term Fibonacci, which usually these longer-term Fibonaccis are fairly accurate, we see that we actually touched and bounced off of the golden pocket, and the golden pocket is sitting right below the moving average I just mentioned. So this actually correlates really well with what we're seeing in price action. What we want to see with EGLD is we don't want to see anything below the 145 level. We want to get support in this area anytime we're here. Anywhere between 143 and 148, if the price ever drops there, we want to see support there. Going below that tells us that we have the possibility of going all the way back to around 110. That's where our next moving average is. So the bearish case for EGLD is that it doesn't hold the golden pocket or the 100 exponential moving average on the daily chart. So these are things you have to keep in mind. Overall, EGLD's still looking bullish as far as its overall pattern goes. It's still trending up. It still has a high margin for tops. And also, it is getting support at exactly the right points. If you look at this dashed trend line, this green trend line moving up, we have gotten support on it every single time, right? We hit it here, we got support. 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 We are trading very close to it right now. So the key right now for EGLD is to hold above that area, and that basically is around 154. So the key is to really not fall too far below 154, and if we do fall below 154, we have to get support at 143 and 148. The trading range for EGLD has become much smaller because the volatility has really disappeared. And it makes sense because so much of the supply is tied up in staking that it's less volatile. And what we really want to see is we want to see those price increases happening because that's going to dictate that more people are buying the asset and likely getting into staking. So the adoption curve has to spike up at some point, and we haven't seen a huge spike in that adoption curve for a few weeks now. So that's something very important to keep in mind in EGLD. Overall, I'm very bullish on it. I think long term, it's going to do very well. But short term, you have to be ready to decide where you may want to, for me, the decision is where do I want to accumulate more, right? I accumulated more at 145 when it dropped a few days ago. So that worked out well for me. I had an order there and it triggered, right? But what I really want to see is, am I going to get the opportunity to buy below 120 again? If it does start trending down and it drops below this golden pocket, if it hits 140 and drops anywhere below it, I'm going to be setting my buy orders at 115 or 120, because at that point, you could see something similar to Bitcoin. You could see a dip followed by it bought up very fast. These type of dips are not out of the question. And if it does happen, it's technically still going to be on a long-term uptrend. Unlikely though. Very unlikely to see that happen, but we have to keep in mind that it could. So keep that in mind. Overall, there's not a ton else on this chart to be worried about, especially on the daily time frame. So let's take a look at the weekly time frame. On the weekly time frame, we see that we have the same situation we have with a lot of other assets. So as we look at Bitcoin, Bitcoin actually consolidated and went below this moving average. So for EGLD on the weekly time frame, if we were to close below this moving average, the 20 exponential, then basically this 20-week moving average would really be telling us that we are either hitting this for another run up, or if we close too far below it, we're turning bearish. Right now, if you look at this chart, it's very bullish. It is still all the candles for each week. So this is a very bullish sign. So let's take a close look at it. What you want to see are wicks. All these are candle wicks. Every single candle for EGLD on the weekly chart has a pretty decent sized wick below it. That means that as it's getting back to this trend line, it's being bought up. People are willing to buy it at higher prices now. We're not seeing it go back to these lower areas. That is putting in a new valuation for the asset. So you want to see that continue. You don't want to see it drop below this moving average, because then this moving average starts to turn. That's a bearish signal. And right now we haven't seen that. The more bearish thing for EGLD right now is just looking at where it could go in the short term. So keep it in mind, this is one of those things that a lot of people that follow EGLD and a lot of people that follow other altcoins, when they think about their altcoin, they think it's just going to go up forever. I'll be the first to tell you that that's a very stupid mentality. You can't think that. You have to realize that things move in cycles. They're going to go up, they're going to go down. They're going to go up, they're going to go down. And if you don't understand that, when things go down, you get scared and you sell and you end up taking a loss. So you have to decide where you think it's going to go. Do you think that it's going to get support on this golden pocket sitting between 143 and 148? Because if you think it's going to get support there, that's a good area to buy. Do you think that it's going to come down anywhere towards this red moving average, which sits at 110? If you do think that, then putting an order at 120 is a good idea. So this is how you decide. That I believe that this is going to turn more bearish as Bitcoin gets more bearish, and I'm going to be able to buy some more at 120, or I'm going to sell now because I'm scared. I'm going to take it out of staking because I'm scared. Like, whatever your decision is, looking at the charts and helping yourself make some choices are very important. But you have to make logical decisions, right? Now, the logical decision isn't always to be bullish. I'm bullish on the project because I have a certain understanding of it. And my understanding of it leads me to believe that this is going to be a very good project long term, and it's going to increase in adoption over time. Could I be wrong about that? I could be. So anyone else who's looking at this asset, you got to look at everything, learn everything about it, read all the white paper, and decide what your opinion is. Is your opinion similar to mine, or do you disagree? If you disagree, that's fine, but just trade accordingly. Do your risk management accordingly, right? Personally, I think it's a great investment, and I'm glad that I'm holding it, right? I'm glad that I'm accumulating it. I think it's going to work out very well. But for the people who don't think that, you really have to do your homework and make the best decision for yourself. All right, that's everything for EGLD. You have the bullish case, you have my bearish case, and we are going to move on to Cardano. Now, Cardano, goodness, look at Cardano. All right, Cardano has just blown up. We have to readjust our Fibonacci, and honestly, this is just crazy what's happening. And the funny thing is, we talked about this not very long ago. A few weeks ago, we talked about Cardano possibly breaking over $2 very soon, because if you remember, so I'll refresh your memory a little bit. For a lot of my videos over the last few weeks, ELYT, thank you for following on Twitch. I appreciate it. So if you remember my videos from Twitch, right? Basically during this entire 120 to 140 consolidation, when Cardano was stuck in this range, I told you that it reached a very low volatility point, and eventually the breakout's going to be massive because of how long it consolidated here. And now we're seeing that breakout. Now, this breakout, I think, also has something to do with Elon saying he wants to use a less environmentally destructive coin and something that uses more energy. So a lot of people thought that was going to be Cardano. I think that's part of it, but I also think that the reason this is happening is because Cardano was consolidating for so long, and now people are seeing the actual value of it. So it's starting to be revalued. Now, it could also be, Seb Hall, thank you for following, man. It could also be because Bitcoin is doing bad. Now, keep in mind that if you're moving your funds out of Bitcoin, the best thing to put them in is whatever is looking the most bullish. Pharmacy Freak, thank you for following. So if take the mentality of people the last few days, okay, so this started happening, this really had the major breakout on May the 13th, which was the same day that Bitcoin started dropping. So basically right around here. Now, if you're a person who is scared of holding your Bitcoin right now and you don't want to put it back into dollars, you still want to earn profit on it, putting it into Cardano when this Bitcoin scare happened would have been a very smart decision because the price continually moved up. So I think that's what happened. I think a lot of people started redistributing their assets and a bunch of that money went into Cardano, and then Cardano started spiking up. Now, this isn't to say that it's not valued here. I think it should have been over $2 for quite a long time. But I will say that the bearish case for Cardano is that at a certain point here, it's going to overextend itself and it's going to have to correct. If we look at the daily chart for Cardano, we are starting to get into the overextended territory, but there's still a lot of room to move for the RSI. So very well, if this bullish trend continues, you'll likely see some form of sideways trading very short and then another run up. And I really think that Cardano could be over $3 sooner than we think. It's a possibility. That's the bullish case for Cardano. The more bearish case for Cardano is that at a certain point, it's not going to keep this parabolic straight line move up. It's going to go back to a trend line that makes more sense. Here we had a very, very horizontal trend line, right? Right now, it's completely vertical. So eventually, it's going to become horizontal again. It's going to consolidate again, and it's going to have dips again. So the question is, at what point does it start having that dip? Right now, it also depends on how Bitcoin does. If Bitcoin suddenly starts going back up, then I think Cardano could start going sideways and see some dips. But I think that at this point, it's unlikely that Cardano is going to drop too far below $2 because right now, as soon as it hits $1.80, people are going to be buying it up. So it's very possible that even a bearish case for Cardano could be a dip down to around 180 and then an immediate rise up, followed by some more sideways trading, and then another bounce. So kind of similar to this, but I don't think that the next consolidation on Cardano is going to be quite as long as the last one. So Cardano is still looking like a great asset, especially if its fundamentals continue to look good. I'm going to have to do some research on Cardano and see how the actual adoption is going, how things are going in South Africa. I haven't caught up on all that information yet, so I need to read about all that. But you have both of the cases here. The bearish case for something doing so well is that it is going to have to correct at some point. And figuring out that timing is very difficult. So keep a look at the moving averages. If we go back to the weekly chart and look at Cardano, right now it is very far above its 21-week moving average, right? That means that at a certain point, going sideways here is going to be very important because it'll give this moving average time to start moving up. The moving average right now is sitting all the way at $1.10. This shows you the speed of this movement, right? Seeing a much slower rise would have been a lot better for the moving average, but right now it just went straight up. Because of that, we definitely want to see some sideways momentum at a time to give these moving averages time to catch up and to revalue the asset, right? To make it show the value at the current prices. Right now, it's looking sort of like it's artificially moving up because other things are moving down. And if that's the case, it's going to see a decent consolidation, but I still think that any consolidation with Cardano is going to get support now at the $1.80 level. All right, that's pretty much it. It's been a long video, almost an hour, 48 minutes. I hope you guys enjoyed it. Make sure you check out the Twitter, the Twitch, all that stuff. You'll enjoy it. Look in the description. I'll have all the links you need in there. Have a great weekend. We'll talk again soon. I have a Polkadot video coming out soon. I plan to have it tomorrow. I don't know if it'll be out tomorrow. I still have more work to do on it, so you may not see that until mid next week, but it's coming. And then after that, we're going to do a video on cake. So a lot of interesting stuff coming. Make sure you guys follow. Make sure you guys like, subscribe, and check out the Twitter and the Twitch and follow all there. XAK, thank you for following on Twitch. I appreciate you. Everyone, have a wonderful day. Take it easy. Do your risk management. Read. Diversify your portfolios. You know, don't put all your eggs in one basket. That can be very risky. It's not a good investment strategy. A good investment strategy is to know that if one thing does bad, you can still do well on the other things. All right? Take care. Have a great day.